It's been quite a week with all those headlines about the Indian rupee's depreciation. In fact, our currency experienced its highest monthly depreciation recently. So what's the deal with the rupee's decline? Firstly, it is essential to understand that the dollar is still king. That is mainly because it is pegged to most currencies and crude oil. The dollar is widely used for international trade and other transactions, accounting for 79% of transactions worldwide. Now that's how important the dollar is. Coming to the basics, the value of the Indian rupee in relation to the US dollar is determined by supply and demand. The value of the Indian rupee decreases when demand for US dollar increases and vice versa. Now, when oil prices go up, India has to shell out more dollars for those imports. This in turn shoots up the demand for the dollar, leading to a drop in the rupee's value against it. Now, speaking of oil prices, they've been on the rise, breaching the $90 per barrel mark and hitting a one-year high. Now, the surge can be attributed to Russia and Saudi Arabia extending supply cuts throughout the year. Now, since over 80% of India's crude oil is imported, it's a big hit for the rupee. Now, adding to this, the US dollar has been on a winning streak. This boost comes after the US Federal Reserve suggested the possibility of more rate hikes to combat inflation. Now, because of this, yields on US bonds shot up, making the dollar more attractive to global investors. So the rupee took a big hit due to the strengthening dollar. Now, another twist in the story is the depreciation of the Chinese currency. Now, Chinese currency is falling on the back of concerns about China's economic well-being. This triggers a shift in investor sentiment. Investors often flock to safer assets like US government bonds. This makes the mighty greenback much stronger, weakening other currencies. Now, you might wonder if the Reserve Bank of India can save the day with its massive dollar reserves. Well, they can step in to sell some US currency in the exchange market to stabilize the rupee, but it's mainly meant to smoothen out the volatility, not dictate the rupee's value. In conclusion, the depreciation of the rupee against the dollar is a complex interplay of various global and domestic factors. Some of these factors can be managed internally, while others like global economic factors are beyond our control. India has been actively working to promote the use of the rupee in international trade, and this move towards de-dollarization and currency diversification is quite noteworthy. It's a significant step in reducing dependency on the US dollar, but breaking free from the stronghold of the US dollar is no simple feat. The dollar has held a long-standing reputation as a safe haven currency and is widely accepted across the globe. Transitioning away from its dominance requires careful strategy and sustained effort. Having said that, this is me, Zana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com